It's March, the latest numbers are in, and it's time for another San Diego County housing market update. Let's see what the latest numbers are going to tell us to expect as we move into spring of 2024. Well, I've said it a bunch in the past, and I'll say it again right now. The past year or two have been some of the most volatile years I've seen in the San Diego housing market since I got into this industry over 20 years ago. We have had significant peaks and valleys that kind of betray the traditional slow up and then kind of quick or sometimes slow down, and more moderate movements that we see in the housing market. There's been jumps and drops and all kinds of weird stuff, mostly pertaining to the market in general, the crazy inflation we've had, and the Fed's responses as well. So now we're looking at the most recent numbers from the San Diego Association of Realtors, and what I'm looking at is sort of a validation of a lot of general feelings in and about the market that we've had over just the past couple months. The overall moral to the story is things are looking up. As usual, we're going to go into these numbers and always I look at what we call leading indicators telling us which direction we're going, as opposed to lagging indicators, because we already know what's happened over the past 6 months to a year, both with the amount of transactions that have taken place and what's happened with values. Like, we can look back and see that quite easily. Let's look at the numbers that are telling us where we're going. So what do? We look at a handful of indicators from the monthly reports we get from the association, and some of the most important ones are new listings coming on the market, pending listings or new properties going off the market, how many closings we've actually had, days on market, and most importantly, the month supply of inventory. So the first bit of information we're going to look at is the amount of new properties that have come on the market as of last month. Of course, we're always comparing last month's data this year compared with last month's data last year, and we're looking at how things have changed so we can get a decent gauge on where we're headed. So when comparing last month's data, February data, to 2023's information, we are up 6.1% in the amount of new properties coming on the market, which is great. Interestingly enough, we're actually up even more than that year to date. It's only been a few months, but we're up 11% just year to date in the amount of properties coming on the market. So that seems to me like a positive thing. We're getting more properties for buyers to choose from, and we're loosening some of the gridlock that we saw from most people in general not really wanting to sell or buy last year. Next thing we're going to look at is the amount of pendings, or the amount of homes going off the market. So there's this many on the market. How many are being taken or accepted an offer and going into escrow? That number is also up, but not quite as much. It's up 1.5%. And if you look at year-to-date numbers, it's 2%. So the amount of properties going off the market are not as high increased as the amount of new properties coming on. So we would think, hey, that's great. Maybe we've got a growing inventory. We've had real inventory problems all these for years now, frankly. Maybe that's growing again. Well, we got to pause that thought, because the amount of closings, or the amount of properties actually going off market for good, not just going under contract, is up 6.7%. So that's a little bit of a higher increase than the amount of new properties coming on the market in the first place. So that number is actually outpacing the new supply, which could do the opposite of what I just explained, which would be leading to further inventory issues if it's not equalized out. So we'll have to wait and see how that pans out. But the next thing we're going to look at is the amount of days on market. And so that means, how long is it taking to sell a property? It's down in a major way. Things were not moving super quickly last year, so this is kind of to be expected, but 24% is a big number year over year. That being said, that 24% does represent a market time of 31 days. And for people that were accustomed to home selling in 2 or 3 days, that may seem long. But if you have a better context, that's actually still extremely short, with many neutral markets taking 60 to 90 days as a normal, which means the slower selling homes might take even more than that. So 31 days is still pretty short time to have on market. But like I said in the beginning, most importantly, we're going to look at this month supply of inventory figure right now. The month supply figure, as I always explain, is if you picture, some shelf in a grocery store and you've got lots of inventory filled up there, and those inventories are houses for this example. How long will it take to sell down to zero if we don't restock that shelf with any more supply? So that's how we explain the month supply of inventory. And that number went up a bunch, which is awesome. We gained 16.7% last month compared to this time last year, but that 16.7% only represents 1.4 months supply of inventory. So going back to that analogy, if we don't add anything new to those shelves in under a month and a half, there's 0 homes for people to buy. That's really quick. Neutral market being 4 to 6 months supply of inventory. So what does all this mean? I don't think I really need to break it down too much for you because it's really painting a clear picture, but the numbers are telling us that we're in a strong market again, in a recovery market. We haven't even really moved into spring too much, and the summer is still ahead. So these numbers are telling us what we can expect, not what we've seen recently. And I think what we can expect is a strong market. We're going to see continued inventory issues based on this month supply of inventory number we just looked at. And you combine that with the amount of new properties coming on the market and the amount of properties going off as solds. Unless something changes, we're going to have further inventory issues. And not only that, we've got this whole rate conversation taking place, right? Right now, you're looking at 30-year rates still hovering in the high 6s. And we generally agree that those rates are set to come down towards the end of this year or maybe even towards the middle of this year, depending on who you listen to. But between inflation starting to get under control in a major way, probably a lot of pressure from the White House, the Fed is going to make some adjustments in the near future. And I think we're going to see continued improvements in the rate space. So when you combine that with the fact that we have low inventory already with no real indicators saying that it's going to improve, but we do know that rates are going to improve, that means we're going to be adding demand pressure and we don't have a lot of supply. We're going to see values jump again on us. So this is kind of feeling like, we're repeating ourselves here, but we're just taking the numbers that we've got and we're trying to predict best we can what those numbers are telling us. And so they tell us, hey, you should probably make a move pretty soon if you've been thinking about it. And, even if you're kind of a sell and move up type of person, and you've been waiting because of how expensive the cost to move has been over the past year or two, there's a good chance you want to do that sooner than later because you would rather have a higher valued asset appreciating in the coming months as opposed to that lower one, because it'll just be even more expensive to make the move if you stay here and then want to jump from there. In any case, let me know if you'd like to talk about it, if you want to bounce ideas off of me, if you've got things that you have questions about. That's what I'm here for. But this is our assessment as of March, and we're looking forward to see what next month's and the future months' numbers bring us. Overall, we're optimistic. Looks like values are going to look good for this year and rates are going to get better. It's going to be a much warmer environment, both physically and metaphorically, for people to go ahead and make a move in real estate in the coming months. So love to carry this conversation further offline. Just hit me up with the number below. Talk to you soon.